Hey everyone, Chris here. Hope you're doing good. I'd like to share my thoughts with you on yields here on LiveDayTrade.com. How much would you estimate the passive yield to be on the global capital markets in the next 10 years? In my opinion, it's going to be zero. Best case scenario, this is a real value number. Worst case, we're talking nominal value. We don't really have to dissect the yield of bonds. They fall between 0 and 2%. Which seems as a sure failure in real terms. But even if something bad happens that's small, there may be a larger decrease in currency value for longer bonds during the keeping period. So the yield for these nominally might easily turn out as zero, or even in the negatives. Stocks are a bit more complicated, but because the profit margins are high and the cost of labor will be even higher than expected, a large growth in profit cannot be anticipated. In the US, Eastern EU, and Japan, the labor reserves have been depleted, and they kind of look similar in Europe also. So a serious increase in rates is quite unlikely in the stock market, especially with stocks being quite expensive historically. S&P 500, Nasdaq, DAX, all of these are near their all-time highs. So I find it completely feasible that 10 years from now, the stock indexes will not have budged from today's values. I think you'll be lucky to earn dividend yields on them. So, I'd say that the long-term outlook is pretty bleak, and for those that are looking to start investing their savings in stocks, they're not likely to come out better off. Okay, cool, I get it. So what now, right? Well, the bad news is that bonds and cash are surefire ways to lose your money. Again, I'm emphasizing that this is my own opinion. And stocks, as we mentioned, will likely yield low results accompanied by high risk. So neither represent two appealing alternatives. Of course, based on the long-term expectations, we can't draw obvious conclusions on the short-term possibilities, and it may easily happen, I think, that a 10-year yield of zero might consist of the next 2 years closing at 25% plus, followed by 8 years at 20% minus. I find it highly likely that after the last 7-8 years have been dominated by the success of passive investments, the next 8-10 years will be defined by broader range trading. So this won't be easy terrain for anybody. So guys, I hope you found this useful. If you have any thoughts, just please comment, rate, and share. Until next time, take care. Bye-bye.